Welcome to the Language of Markets live session. It is July 3rd, Wednesday. Welcome back. It's almost July 4th. Just a reminder, we're not going to be here Friday. We're taking a long weekend. You guys enjoy the weekend. Don't blow yourselves up. Don't get in too much trouble. We'll be back on Monday. But, we'll have the recordings. And maybe I'll get a blog post up. Don't forget, I'm doing some blogs now. So I got a few blogs. I've gone back to doing a few of the trading recordings once in a while that I used to do that we're putting up on the blogs. So we got a few older blogs up there. We got a few newer blogs up there, a few clips. And even a YouTube channel. I'm posting those on the YouTube channel. But they're the same as the blogs. All right, so Friday off. To the pub, Gary. You're probably in the pub now. What are you talking about? When did you leave the pub? On Friday? You got to work sometime. All right, so today we're going to have some fun. I do have a couple interesting questions from some of you guys. And we've wrapped up pressure cookers. And before we move on to something new, right, I want to go back and suss out the one-line presses again. I want to spend a little more time on that. I want to add a new dimension or two to them. That was a wonderful framework, right? It's a beautiful way to view the market. Remember, each of these frameworks, they're a way for us to see the market. All right, way for us to see what's going on and understand. Same with this median line. It's a way for us to see and understand what's going on in the market so that we can trade. And it's best to keep it simple because there's so much going on. Chan, you forgot how to get in? Can someone post the link for the session, please? You're in. Hang on. Chan, you remember how to, okay, someone post the link in there. There you go, or post. Yeah, just, I guess he can't hear me. Let me actually send a little email to Chan here. And then we'll get Chan going. There you go. Thank you, Raj. We'll get Chan going. Chan's, there you go. You're in, Chan? You hear me? Chan's special. He's our very first subscriber because he couldn't read the home page that says we're under construction. So Chan's special for us. It's been around for a while. You're in there, Chan? You go to the login menu, right? And the link will be there somewhere under the account. Somewhere every month. And that link will be good for the month. So Chan, you're the very first before we got the website going. So you got a special place. All right. So what I was saying, Chan, is we are finished with pressure cookers, right? We're having Friday off. I want to revisit our one-line press work. It's a beautiful framework in order to view and see the market, to see the market make decisions. And I'm going to, we've done this once. I'm going to add another dimension or two to it. It will be fun, right? See, each time, right, Edward? Each time, I'm glad you got the spirit. Each time we go into it, we learn a little bit more. And it whispers a few more secrets to us. And we really just want to be able to relax. There's so much going on with the market that if we do too much, it gets confusing. We get discombobbled. I like that word. And we're not real sure what to do from there. A median line set could be a framework for viewing the market also, rather than something that just tells us what to do. I'm going to keep trying to drive this point home till everybody hears me on this, right? We want to relax a little bit. And we're doing enough training in here that things will fall into place. Yeah, we do. I need the reminders too, Edward, right? It's a serious thing. We do need these reminders. It's a training. We do need to stay on top of it until it is in our bones, until we kind of get it in our bones. This isn't an easy thing to do. Trading is simple, but it's not easy. We have impulses that want to do all kinds of other things. And so we do need reminders, and we do need to say, you know what, it is all in swings. It's that easy. It's not a system. And then we can work with that. So we'll keep talking about that. This isn't the easy road. So we're going to go into the one-line press stuff for a little while before we do something new and revisit it. Like I said, I'm going to add a dimension to it. So before we start that, I'm going to give enough that we can practice over the weekend. Practice helps. What I was saying about, let's actually go to this for a minute. Let's go to this where we left off. Or we can even go to the, that's where we left off live. All right, so what I was saying about, the practice and, starting to hear things and the repetition, we can talk about things, right? But what's important is understanding. And I want everybody to know what understanding means, because this relates to my next question. My next question relates about when do I switch from a long bias to a short bias. I'm going to go over that a little bit. And I want to talk about what understanding means. And it's a little more than just, the surface level definition of understanding. And this is why we have to practice as well. This is why I'm going to give enough today we can practice. But understanding means to experience the thing, a personal insight into the matter. That's what understanding, when we hear understanding, it's a personal insight into the matter. It's an actual experiencing of the thing, which is different than a mere intellectual understanding. So I'd like everybody to notice the difference between an intellectual understanding of something and an experiential understanding of something. Somebody can tell me, in your bones, but just ground it. Somebody can tell me all about the sunsets over the Gulf Stream and the green flashes, and they can give me all the science behind it. But if you haven't seen it, shut up. Don't tell me about it. Right? It's different. It's different than the experience. You can tell me about it. You can read the science behind it, right? Oh, you love the green flashes, right, Edward? You know what I'm talking about. It's a special thing, and we can read about it. You can watch. See, now we have the internet. Everybody can Google what it is and say, oh, that's cool. And then you can talk about it. But it's an intellectual understanding rather than, hey, you've been there. You've seen that thing hit the water. And poof. It's the same thing. Somebody can tell you about roller coasters and how scary they are. It's different when you're on the roller coaster. So we want to get an understanding of these things in our bones, like Gina says. And it's different than an intellectual understanding, which means practice, which is always a bit difficult. Practice, 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 practice. And that's a little more serious than you might realize, Gina. It's in your bones. In your bones is like the deepest level. To relax in your bones, to get an understanding in your bones. And same thing Edward says with skydiving, right? You can talk about it. Talk about all that until you jumped out of that plane. It's a different thing, right? Woo! All right. But we want to do that with trading. So we watch these presentations, and I can give you, we start with an intellectual understanding. All right. This is a swing. This is the instruction. All right. That's how it starts. That's how the teaching starts. And I try to get it as solid as possible. So it starts, oh, that's what a reaction leg is. That's the definition. Okay, that's an intellectual understanding. This is an intellectual, what we talked about here was minor breaking into major. And I showed you a model. A model is an intellectual understanding. And the real understanding comes from being able to map this and then seeing it happen. And then you get something. You get all the dirt, all the muddy stuff, all the rolling around. It's not just theory anymore. So we take it out of theory into practice, and practice will always be different. So it's a little. So just make the distinction between intellectual and experiential. We left this here live. We talked about a setup, minor into major. We talked about what is. And if we watched it, right, we watched it hit this particular swing. We were following it. We watched it beat. If you watched it, you'd then could get it in your bones. Then if you followed it up, you saw it got to the gray projection we did and turned and took off. And it's still not that far from the blue projection, right? Still in the same area. And then it completely beat this little guy here, right? It beat the gray now. See, it tried. So if you watched it, and, you know, from this kind of thing comes, well, now I might get it's going down, and maybe I can sell this thing somewhere. So you learn something from this. And this is one of the big things that I've learned from this is, let's take some of this off for a minute and just leave the blue. This is one of the things you want to really start to get in your bones. This is what price did. True? Lower low, lower high, in a wave, just like that. True. That's what price did. That's experiencing the swing of it, the wave of it. In the meantime, it made a whole lot of noise going back and forth. And this kind of move scares the heck out of people. This kind of move scares, but it's still the wave. It still made this wave. Still at the median line. Still made this wave. It broke the upper parallel by a little bit. You know, of course, we can put a sliding parallel on that little bit of slop. And so it's just a wave. And so we need to see that, especially if you managed to get short somewhere and then you bailed out right here via impulse. Good, Phil, we're going to look at the other blue. Phil's ahead of me. But we want to see that, right? Then you get that experience that, you know what? Price can try in here and look awful scary. And then when you get that price can try in here, maybe you quit always trying to try the try, and you use that try to your benefit. But you want to see that price can do all kinds of things inside of the wave, and not one little thing is always going to save you. Not one little confirmation is always going to save you. It's just not going to work. And so that's a good starting point, and that's an experience of that. And it was very simple. It was very simple. Another interesting experience, if you haven't tried it yet, would just be to, be short, go away, and take your stop or take your money. That's another interesting experience to get on your own. It changes trading. It changes trading. So Phil's seeing more. Here's what I see, Phil, right? Boom, boom. Actually, let's switch to the 13 minutes since that was our job, right? We watched this 13-minute right here. It was looking pretty interesting. Our job was to follow it. And so everybody else's job is going to be to follow it. Remember, we followed it up. We're following it down. All right, we played over here. Forget all this. We started here. This is the job to follow this 13-minute. And so I'm going to help demonstrate that. All right, it poked it by a little bit, and it went down. So, we'll say it's that big now. And now we have a whole new swing. And in this whole new swing, I'm going to forget these, okay, because it's got a new bunch. And I'm going to say, what's the minor? What's the major? Well, that's the major. And this is the minor. That's the minor. That's the minor. Okay, the minor got beat. Now I'm going to watch the major. Keep in mind this is a following exercise, and the experience I'm trying to get across, to transmit, that I get is one of following, not one of where do I trade. One of, oh, I'm following the market up, I'm following the market down. And then as it beats this, you can even, it's also a training. It's also a training in structures. Okay? It's also a training in structures. You can follow. So we see it try. It's not doing it. Right? It's about the same size. It's not doing it. Oh, blue got beat. Blue just got beat. Okay, so now we're going to follow it this way. And that's current. And so we'll follow this next week. So that was, I want to get the experience of following this market across to everybody. What it is to follow a market through its changes. So we'll leave it there. Now let me get to the question. And by the way, the understanding, it comes from, what we talked about earlier, observation. First you observe, learn to see what's there, learn to understand it. All right, so I got a good question from somebody. It says, I struggle with finding when to switch from long to short bias. So we'll just put this question up here. Now this is a good question. I appreciate this. It's a tough one. You guys getting hard on me now. It's a tough one. That's all right. We like tough ones. All right. I struggle with finding when to switch from a long to short bias. He says, I understand what you teach about swings and when something has changed, when price breaks a major reaction leg. But when exactly should one switch from long to short? Is it after the change happens? And also when a major long-term swing is broken? So this is good. It's questions with a question mark. I like questions with a question mark, right? It is a toughie. For example, after an extended uptrend, price breaks a major reaction leg but is still above a major swing low. Do you wait for that low to get taken out, or is it okay to start shorting on the break of the reaction leg after the price breaks? Let's see if we can draw that out. So he says, after and by the way, if you have this example, the person has sent me this question, what I'd like you to do, for example, is find it on a chart and send it to me, okay? This way we can look at something actual at what you're talking about. So, for example, send me the picture of what you're talking about, because now I have to use my little mind and see if I can figure out what this is. After an extended uptrend, price breaks a major reaction leg but is still above the major swing low. Okay, so what he's saying here is maybe price goes farther than that reaction leg, but it's still above the major swing low. So I think what he's saying is, hey, we have a bigger reaction leg, but it's still above the low. Okay? Do you wait for that low to get taken out, or is it okay to start shorting on the break of the reaction leg length? All right, so good. He articulated that well. Is it okay to start shorting on the break of that reaction leg length? All right, so this is the reaction leg length here. And so the question is it okay to start shorting now? I want everybody to think this through, okay? So put yourself, if you guys been trading for a while, you've witnessed this. All right. So everybody tracking? Do I wait for this low to be taken out, or is it okay? And we can reverse the situation. All right. Here, do I wait for a high to be taken out, or can I go ahead and get long on the break of that length? See, we can reverse it live. And this is what we want to do for our experience. Now, just listening to him be able to articulate that says he already has an understanding. And that is beautiful, right? I have to wait and see. And so the fact that he can articulate this means what? He can go research this live. Yeah, no swings broken, but remember the question, Adam. Okay? I love questions, but we have to realize the power of a question isn't asking the question. Maybe there's even, sometimes this will lead to another possibility we didn't even think of. So maybe this isn't even the question we need to be asking. Sometimes it takes a long time just to find the question we need to be asking. And I got the feeling this isn't the question we need to be asking here, but we got to take it from here. right? Edward says no LSBs taken out, none of that, right? Maybe a minor LSB, but that's about it. And so we're kind of working with these questions. We're kind of working our way to the right question. Hey, Raj, it could be a skewed expanding pivot. Yes, it could be that tricky. Aaron says depends on context. For example, the last major pivot in CL is really far away. Good. So it makes sense to go long now, but if they are very close together, you might want to wait. Okay, good. That's a very good understanding. Adam, Phil says this is an expanding swing. It's an expanding leg, not the swing, Phil, right? Winston says, next question is, how often is the break just an expansion? True. There you go. What type of trade we want is available in the cycle, type 1, 2, and 3. I agree with that, Stephen. And I agree with Edward. We just don't know. Right? I don't know. Not a clue. But nobody else knows either. But we're equipped to go look and find out. And Aaron's looking at the 3 types of trades, right? It could be an expansion, a 2, or yeah, agree. I agree with all of that. But what I want to point out is if you can get this far to articulate this, you can now go get personal experience. And don't believe me, what the heck do I know? You know what? I might be out to lunch. Only Miss Chloe knows, and she ain't talking. That's right. And so, do you wait for that? So maybe this isn't quite the question we need to be asking, because what we're trying to do is turn this into a system now. But it's a very worthy question to start with. All right? Let's start with, when do I switch from long to short bias? All right? And let's think about this. And I'm going to say, it's not so much that we're going to personally switch our bias as we are going to learn to mark out price and see the truth of the matter at any moment. Whether the truth is the swings are bigger or smaller, the swings are breaking or not, the gaps are continuing or breaking. The pressure cookers are holding, right? So follow me on this. Rather than just switch a bias, which is going to be a problem for a trading to have a bias. We want to treat this is attitude and how we approach things. We want to treat this a little bit differently. We're going to look at what the truth is, because that's where we have to start. And the truth can be relative to swings, or the truth can be relative to gaps, okay? This is, my biggest gap on the way down. Where is price relative to that gap? And that will be my truth that I can refer to with price. Or it can be with swings, and that will be my truth that I refer to with price. Or it can be the pressure cooker or the one line. But if we're talking swings, if you have the ability to articulate this question to this level, you can go find it personally. Really, don't believe me. Because it's not one of these answers that's going to get answered in a day or with a quick answer. It's a great question. And I think most teachers would just slough it off. I love this question, okay? We need to ask these questions and go check these things out for ourselves and find out. Don't believe anything. You can do this. And Adam noticed, well, there's a difference in the length here also, something. Now you have the means to check this out. Because if I just say, yeah, it's okay to start shorting, it's wrong. Sometimes it's okay to start shorting up here, depending on what price is telling you. So this situation is much bigger than we're giving it credit for. Okay? It's not just a simple okay to short, we can start there. And he says, could probably look at minors within majors and notice how they change. Yeah, I agree with all of you guys. And the more simplified we can make it, the better. But it's not just short bias and when do we start shorting. This is our starting point, what the market's doing. But if you can do this, you can now go and look at this market at every time a leg is bigger and it doesn't break a high and it does break a high. See? That's the thing. Every time a leg is bigger but it doesn't break a high and it does break a high. Now you're starting to get it in your bones, right? Get it in, and then I do it here also, and we look and we see live. You saw, I'm picking this stuff up live. We looked at this thing right, live. Boom, what happened? And then we start to get it in our bones. And so we're learning how to do this, and you can do it with swings or you can do it with gaps. Or you can do it with pressure cookers to simplify it. And then you don't have to look at everything all at once. So I'm going to hold this question, and I want everybody else to hold this question. And if anybody wants to do research on it, okay? Because I do a lot of times, I do a simple, blue is beat, I'm going with red. And sometimes I'll get caught, and sometimes not. But there's always a little more going on. There's a little more to the story. There's a little more, as we said, context and a story going on. I can't cover the 10,000 things, but if you can do this much, and I congratulate you for noticing and seeing that, what's it mean when this is, guys, we're actually entering into the realm of our press structure work. So if this swing is going to be larger and not take the low out, it's going to imply it's going to have probably a bit of a larger impulse leg. Hey, Nate, no, I'm saying he or she could look at the same chart and see the minors within the majors and see how the minors go up and down and expand. Oh, that's one way to do it also. Yes, that's a good idea. Then you can see how the minors go up and down and expand and what they do. But if you can get this far, you can start to answer that question. And you can see on a chart, and sometimes this will be in a situation at a low, and sometimes this will be in a situation, after a big extension, like he mentioned, after an extended run. And sometimes it'll break the low and hold in that situation. And we cover all of these things here. We talk about all of these things here. I mean, you guys watched me do what in the Aussie the other day? Oh, look, where did it come from? Came from these guys. You saw me, I just drew it. Right? It broke some swings. It made a bigger swing. If you ask me, it was okay to short up here. Right? So it's always a little bit different. So the more we learn about the language, the more we can be fluid with our mind. Hey, Phil, on CL now you have a bigger swing and a nice pressure cooker. Let's see. Oh, yeah, right here, right? You got a nice little pressure cooker cooking. There you go. And a retest, huh? So it's a good marker. We have to be careful about adding too many things. So let's start with the truth rather than a bias. I'm talking to this right here. And there is no way to say exactly when one should switch from long to short. Ultimately, all this mapping is to find where buyers and sellers live, long-term, long, short, according, as long as context favors 3-to-1 move. Okay, I'll go with that. I'll also say, at any given point, this is a little more advanced. You were looking further back, Phil? Bigger pressure cooker? I just saw that one. You're ahead of me. You're ahead of me. What was I saying? You messed me up here. See, I forgot what I was saying now. Ultimately, when it comes to down, that's all right. When it comes to down in the mud trading, all right, what's going to determine this is to find who's controlling the market at any given point. Okay? Who's controlling the market at any given point? And that can be that Godzilla structure we found. Yeah, I'm going to skip what Phil was talking about here. He messed me up last time. Sorry, Phil. I'm going to show you, say, a personal example. I'm going to show you an example from someone who sent me a chart in, and then I'll also show you a personal example. Okay? So, on a more advanced level, it's what's controlling the market at any given time. So, for instance, if I go swing, right? The market's down. I'm thinking. So this is from my trading room, okay? This is from my trading room yesterday. So if I go swing, the market's down, and I'm doing like this, and I know how to read something with price, and I'm watching price, and I just watch it blast. Very distinctive blast. Now I just watch it test the mountain. It's down. You know, I have a little swing up. Okay, zoom right through it. Okay, now what I would like to do is sell this thing at some point. Okay? I want to sell this guy at some point and, well, you know, make some money off of this thing going down. I want to follow this thing down. It's going down, and so I'm going to go down with it. I can't tell you how many people get their butt in trouble by always predicting a change in a market that's cranking down. All right? This market happened to be cranking up. But we all get in trouble by predicting change in a market that's cranking down. And it's one of those dumb moments where you say, duh, just go with it. All right? Duh, just go with it. So I kind of want to get in here, and I want to sell this somewhere and, you know, get myself a stop. I don't have a lot of things to hide behind, but, you know, I basically want to get, you know, above these guys somewhere. And I'm happy, right? I'm going down. Everybody see the structure, right? See the mountain, see the valley. It's going down. And at some point, you know, I move my stop a little. I get stopped out, but I'm watching the market. And at some point, right in here, I get what had just happened. And it's not saying you always flip yourself, all right? I get it via this structure, what had just happened. Even though the market's going down, this guy was controlling, all right? And then they drove up. I mean, this is sort of a little thing. This is on-the-fly tick trading, right? It's a little different. I'm just trying to give an example here. So I take a little bit of a loss, and I say, you know what? I'm ready to take this now and get stops underneath that for a long trade. Because I saw the switch in these little swings that organized themselves. Now, I didn't take it all the way up. I took it out to here. But I didn't take it all the way up. And so, even though it was going down, I decided to go long via something controlling. Let me show you another example from a member. And, okay, this is just down in the mud trading, all right? and I appreciate the chart. He says, right, the market has been in a downtrend. He's going to sell it, and he sells it. He sells it. Finds an energy point. And he likes, the wide range bar. He's going with the sellers here. He's going with the sellers here. And then he says, he's worried about when he executes, he should have waited longer for more information and all that. He said he tried waiting longer than pulled the trigger, and, then he didn't trade for several weeks. And what I'm telling you guys is to trade. Keep your size low, trade. See, it looks like he's on the minis. And by the way, you can chart the bigs and trade the minis. Doesn't matter. But trade. So he gets short. And then he says, I realize I need to always be willing to wait or always execute and not meander and flip back and forth. Anyways, here's another trade. My short area became support for the longs. See? Short area became support for the longs right here. Everybody get that? His short area became support for the longs. Now, the only problem he had wasn't in taking the short trade. We all start to think, we're idiots for taking the short trade. And it's not true. We think we should know something. We should have known. And it's not the truth. All right? So he takes the short trade. And he says it right there, right? Okay, I'm good. Take the short trade. It looks like a good place to take a short trade. And he says, my short area became support. See, he got short. Little pressure cooker. Everybody see the pressure cooker? His short area became support for the longs, which gave him several more swings to go ahead and switch with. It's okay to be wrong, right? It's okay. We're all going to be wrong. But then as a trader, you realize, if this was your marker for selling against and they just got whooped, where can I get an entry to go the other way with it with a stop? And it gave several all day long. And that's the part we need to do as a trader to get that kind of mind fluidity rather than look for our checklist. Everybody get that? He said it himself. That's what he needs to personally learn, not to wait. He thinks he needs to learn to wait longer. No. He needs to learn to see that return to the scene of the crime here, in this particular case, was a beautiful place to go ahead and switch. And that's an incredible light bulb that can go off for you. Not that you always flip positions, but light the light bulb. This is return to the scene. If you're in a good area, the price is liable to return there, right? And yeah, it's the staying fluid with what's happening. So rather than, and we all do this, rather than beat yourself up, I got stopped again, I'm going the wrong way. Even if you don't trade it, watch. He said it, so he knows it. He knows it. He's just not pulling it. In the right frame of mind, see, he's a good trader, right? He sees it. He's just not grabbing it all the way, and we're all at that level a lot of times. He sees it. He says, my short became long support. That happens so many times if you're in a good area. Yeah, it does. In this case, this try doesn't make it. And this is like the control. And once this guy gets whooped, boom. And so this is beyond the question of just following swings and developing a short bias or not, or a long bias. This is fluid trading. And maybe we're all not ready for this right now. And, you can come look back and say, I coulda, woulda, shoulda. No coulda, woulda, shoulda. We don't do shouldas. We say, what can we learn? No shouldas. And so, okay, beat yourself up. Watch that. Do that for a while. When you get tired of it, learn. And then come back, because he's a good trader. He sees this. He's just not putting it all together. So I encourage him, since he said my short became support for the longs. Okay, you don't hop on here. What about over here? This is Andrews also. Break a line, follow back down the line. You don't hop on here. What about over here? And so this support, this short, right, that becomes support for the longs is something that happens over and over. Look at them. Look at them. Look at this. Let me get rid of all this junk. All right, look at this move all by itself. All by itself. What sticks out? This tail. It's swinging. You have a bigger swing here. That tail sticks out because they made a new low. Ah, it's good, right, Adam? Look at that. Boom and gulf. That's sellers, right? Heck, sell it. It's a good area. Now look at that bar. Wide range bar. Oh, no, we're hanging. That ain't it. Hard up. Oh, what happens next? We've retested that. Ah, my short got busted. Now I'm retesting that. What happens next? We start to poke at the high. Ah, so maybe your short, which was in a very good neighborhood, now becomes and is teaching you to be support for the longs. And now you can even combine swings with this. Ah, there it is. Now you're swinging. All because you got stopped out. Then you started to learn. Or you got stopped out here and you started to learn. It is beautiful when you get it, Adam, right? I mean, if you keep getting stopped out on these, it should be telling you something eventually. It's like, all right, price is switching and swapping. And at some point, it's too late. You know, they leave you. Anyways, this is just down in the dirt examples. Hey, Mike, perfect 1, 2, 3, 1, 2. Oh, yeah, okay, I see what you're saying. We haven't really gone over that here yet. All right, so, I just wanted to share a little bit of that with you. There's no easy answer, but whoever's in control, and maybe you're not ready for that level yet. Well, practice. Practice, practice, practice. And the more you see, the more you watch these things happen, the more you flip with it. And that's why trading tick charts can be very difficult. You have to be fluid. The 20 minutes, the hours, you have to be fluid also. Because one thing's for sure, the market will change and then the market will change again. There is no guarantees. The market will change, the market will change again. One way or the other. Price, as we all talked about, can literally go through and just be an expansion. So I'm going to keep that question on the back burner. And since we know how to mark out swings, then, well, it's now in our field of awareness now, so we can watch. And maybe we can learn something from that. So it's more than just, because anytime you fix a setup, forget it. It's not going to hold for you. Okay. So here's what we're going to do now. We are going to, actually I saw it there. We're going to review enough to where we get some practice with our one line. All right? I want to remember this because this is going to be a new dimension to it. So we'll come back to this ES. So what we're introducing now here's a good example, right? We broke a swing. Does that mean it's going down? Is it okay to short? Short it. Let's see. We'll find out, won't we? So trading is always a little bit more, and learning a language isn't easy. But let's put this on a 240 because I spotted something over here. Let's put this on a 240 to start with. And let's slow my roll down a little bit and go over some instructions. All right, so what we're going to do now is introduce one-line press structure as a framework for viewing markets. Okay? And I'm going to give, it's very objective, it's very simple, and it's a way to see something. What it does, it shows organized behavior. So this is the press structure. It's going to isolate organized behavior in the market, okay? And show when that changes. What I'm going to do with this is view a market minus all of the noise, okay? I'm going to view a market minus all of the noise that's involved and only see this and swings. That's it. The end. So I'm going to view a market and only see that and swings. That's all I want to do. And so this will help calm our mind down a little bit, okay? This will help us see some things. I just want to see this little structure and swings and go from there. We don't have to add a whole bunch of too much of anything to it. All we need is some instructions for, well, how to spot this in the mess. You know, how do we spot this in, you know, all the crazy mess? That's all we need to be able to do. Maybe I can find something that's current here. There we go. There's one. I'd like to find something that's even a little closer, but we'll just work with what we got for now. So the instructions for this are pretty simple. We're going to look at this at a swing level, and then we'll go practice a little bit, and bar level. Anybody remember the instructions? In case I forgot. So remember, what we're doing is we're isolating some behavior in a market, and it's behavior that's very particular, that's going to give us a reference point. And we can sort of talk about this short and long bias in the same way, except we're going to make it relative to this particular structure. Hey, Aaron. Aaron says connect the pivots of the last two same-size swings. All right, so let's look at this guy. On a bar level. And a swing level. Okay. Swing, level, press structure. Follow the last two confirmed swings. Find two relative swings that pull back into each other. Last impulse needs a good. Let's see if we can keep tightening that up. Adam says 3 bars of, that's the bar level, 3 bars of similar size followed by an expansion. Good, you guys remember. I was worried nobody paid attention. This is going to be an interesting one. All right. The reaction legs must be same size. So these directions, and I know we have a few new people here, so this will be good for them to investigate. These directions are pretty simple and pretty objective. All right? And we also need to say, as Raj mentioned, thank you, Raj, the swings must pull back into each other. Impulse leg must expand. All right, so we know what the impulse leg is. We know what the reaction leg is. So see, this is the impulse leg. New high, that's the impulse leg. It has to go bigger. All right? So we have two confirmed swings here. And we have same size reaction legs. And what we're going to do is make a little zone out of this. We're just going to draw and make observations. It's going to be a reference point for us. That's what this is going to be. It's going to be a nice, solid reference point for us. And the 3 types of trades will apply here. Now, at a bar level, you can look at it at a major swing level and a minor swing level if you want to. So at a bar level, Adam's got the bar level. At a bar level, it's very distinct also. Okay, you're going to have at least 3 bars, that pull back into each other. Okay? At least 3 bars that pull back into each other. So let's write out a bar level press. Bar level press structure. Minimum of 3 bars making lower lows higher highs then pull back into each other and then expand. So it's very distinct when you see it on a chart. And it's more than just a technical pattern. There's something going on here. There's a pressure, and I'll describe it. And it becomes a great reference point for us to look at. And it's not that hard to see on a chart. And the beauty of this is that you can forget everything else. So all we're going to do is look at press structures and swings, all right? Press structures and swing. Two things. That's it. No more than that. Just two things. Press structures and swings as we practice. And I'm going to suggest that we'll go look at a few now, that over the weekend, you take your charts for the week and do a review. This is part of that practice that sinks into the bones. You can get the experience of these things. And you go back and go slowly over your different markets that you follow, whether it's a tick chart, whether it's, soybeans, whether it's currencies, and you go look for these guys and see what happened. And see what happened. It's very good practice. And for as long as we stay on this framework, I want everybody to do that every weekend. Every weekend. Okay? And follow it live during the week. Because you'll see that you've missed some things. Again, the beauty of this is it's showing some sort of behavior that just got organized. Right? It just got organized. It's the same size. It's not magic. It's already showing you. And it's showing you this is what they're doing. It's like a sloped gap. It's like that trade where you took a short and then the longs became support for your short. It's a point of ignition. It's a swing structure. It's all of those things. But it's very easy to just watch price and watch it via swings and this press structure in minor and major. Now we're going to add one little guy to the mix here. We're going to add one little guy. We started to notice it last time. This is the fun about creation. We're going to add one little guy to the mix. So notice we are expanding. And I want you to find them both up and down. Right? You do the models for down. When you find them on your chart, actually draw this and write the instructions so that they're true and that they're in your own words even. And that's that training. That's that training we can do. But we're going to add one to this now. I'm going to start to show it to you in, let's see if I left myself enough room. All right, swing level. What we're going to add is another one for us to investigate. And, we'll talk about all the theory behind this next week, about all of them. So here we have, at this point, we have two confirmed swings. But what happens when it expands this way? Instead of the other way. You guys follow me on this? And then we'll draw it. Imagine it, what it's going to look like bar level. So bar level is going to be and instead of expanding up, now reverse this for the downside. Instead of expanding up, going to expand down. Gary says, I see that all the time on bar level. Well, let's now learn to see it on swing level too, Gary, because if it's on bar level, it's on swing level, right? So inside of these bars is this. Inside of these bars, if you went down in time frame, is this, right? It must, right? I will look. We don't realize sometimes that we tend to see things one way on the upside and see things another way on the downside. And it's true. This is why the training must come in, because markets go up and down. You know, if you're just going to be stuck saying, I only see it this way, then you're going to twist your experience a little bit. And it doesn't have to stay that way. First, we have to become conscious that we do that. And then we have to go practice so we can, it's a training. We're training. All along here, we're training our minds. We're training our minds in observation to be conscious of more and more and more and more and more and more and more. We're training our minds to see things both ways. And so these classes, it's a mind training all along. If I had my way, we could do like a 10-day thing where I lock the doors and lock everybody in. Nobody could get out. And then we just go at it. That's just because you don't stand on your head to look at your charts. It's true. Gina needs a padded cell. We'll save the padded cell for Gina when somebody gets a little too nuts. Gina could be dangerous. All right. But notice that we do see that differently sometimes. Up or down or up. I used to take, the currencies are nice. And Ensign has a feature where you can flip things. So, sometimes you can take the futures of something and put it up against the currency or flip the currency just to get another view. And you go like, whoa, right? Rita says that would be cool, a trading retreat. You wouldn't be saying that in the beginning. I'd have to lock the doors. Nobody leaves. But it's true, because we're wired to do certain things. And so it does take a little while and like repeated exposure, over and over just to get simple things, because I don't get them either. I need it. I need it myself, Rita. I need it myself. Okay, so we're going to look at these guys. So we'll start with that. And let's go look at a few on the charts. So we have an idea. All right, let's go look at a few on the charts. So we can see, we'll save this guy. Maybe I could put it on an hour. So you can see in this model here, again, it's a beautiful way. So just look, I'm skipping gaps. I'm skipping alley-oops. I'm skipping mountain structures. I'm just seeing swing. And as I look, I'm looking for same size swings that expand. And your eye can begin to get trained to this. And we got to see, does this fit the definition? Is it the same size? Yes. Do they pull back into each other? Yes. Does the impulse leg expand? Yes. Now we got to look and say, oh, maybe there's even another one here. All right, so I said follow the last two. All right. So do you guys see how organized? And the impulse leg does expand. So in this case, we're watching price go like this and expand. Now there's a lot of implication. Look how beautifully organized this is. See that? It's beautifully organized out of all of this mess. It's a push, right, Gina? Now, here's what I want you to get, Gina. I'm not looking at every little bar and every little gap and worried about my bias and worried about this and worried about this funny little structure. All I see is we have a big swing about yay big. We have little swings about yay big. And, if I want to do a little more work, I could say, all right, there's like a minor swing there. But this is it. And then I watch and I learn. And the key to this isn't that it's a special method or that it tells me what to do. The key to this is that it relaxes me. And so instead of seeing squiggly weirdness all over the place and identifying every little piece, this is all I see. And now I'm free to see more that can fall in my lap without me going and fetching it, without me forcing it. And then when it comes time for trading decision, I can decide. Do I want to go with it? Do I want to do the try? Do I want to do the 2, 3, and it's that easy. And then all I got to do is follow. If I see it again, see, it's a smaller version. Okay, look at that. I've got my market mapped with the next little one here. And this is what a bar level would look like. And sometimes a bar level will get me into an entry. And it will tell me all kinds of things. Let's look and see if we can find that funky one. I saw it the other day over here. All right. So look at this chart. It's very organized behavior. You want to see this kind of thing that stands out. So what we're looking for is, this very organized press, as Gina mentioned, press, and then expand or expand. And out of all this noisiness, just soften your eyes. Relax the back of your eyes a little bit. Soften your eyes. Follow the chart down. Follow the chart through its turn. And see if you see part of the instructions. Part of the instructions is 2 parts, right? There's going to be a press and there's going to be an expansion. So look for either one of those. And see if you see something that stands out here. Your eyes should almost just be drawn to it. Beauty at the bottom. You see it, right, Phil? Your eyes just should be drawn to it. See it? See how whoosh, your eye just gets drawn. See? This is this. See him press. Do they expand up? No, they give it a try though, huh? So no go. Do they expand down? No, this is a different animal. Press. Boom. You can see it. All right, they're pressing. Bar level, little bitty swing level, press. You can see that guy in there. See, it's very, very distinct. Very distinct. Retests on the other side also help you with things. Retests on the other side help you with things. You can even start to even think about, remember, all we're doing is swings and press. See the swing? See how I'm relaxed? I'm not worried about too much, right? That's a nice level. Now, if I was doing swings this way, see, even though all I'm doing is swings and press, look how complicated it can still get. And imagine if you start to add millions of things to that. Okay, the grays beat. Guess what, The grays beat, the blues beat, it's going up, I'm getting some sort of a clue. Let's answer this member's last question, right? What if the swing is bigger, but it doesn't take out the high? Doesn't this fit his question? The swing, the reaction leg is bigger, but it does not take out the high. It fits, right? Am I wrong about that? That was his question, if I'm right. For example, after an extended trend, the price breaks the minor or the major leg, but is still above the major swing. Do you wait for it to get taken out? Or is it okay to start, going the other way? Spot on. Thank you, Pete. So, in this case, which every case is a little unique, I don't know. I'd be tempted to buy it, even though it didn't take the swing out. Type 2 relative to this, I think, Phil, what we're going to do, since this is its structure, we're going to call this a type 1, okay? We're going to call this guy a type 1, this, whether it expands that way or that way, right? If it expands through it, this whole structure, then we're going to call, when it lands on this side, a type 1, since it didn't expand down. So this is still all type 1 in here. But we'll go over that next week. I just wanted you to see an example of that. But I'm thinking, yeah, this has got to be a type 1. It's one structure, and it makes a new high. Boom, it's got to be a type 1. The other dimension we're going to add to this press work is, since we've done the pressure cooker work, we're a little more cognizant of where these things happen in the swing, right? So this is part of our training too. Where does this one happen? At an absolute low down in here. At a give up, that's where this happened. Now we're ready to start getting these in our bones. And it's simple. Swings in this. But even though swings in this, I'm saying it's simple, it's still a lot to put together. So imagine we're throwing median lines and gaps and tails and do-do-do-do-do-do. We end up with confusion, and it gets hard to trade when we have too much on our mind. It's the beauty of this guy. So this, I'd be thinking about it, I'd be thinking about it. Boom, boom. Now, practice seeing them on your chart, right? We have something here. It looks like it's matching, right? Now I'm telling the story of price, okay? We've beat the reaction legs down. It's possible, as Phil was mentioning, it's just an expansion, okay? It's possible. Didn't take out the high. Didn't take out the low, and now we're at a pressure or at a press structure without taking out the low. So this would give me a little bit of pause about selling this here. Maybe this is a type 2 for this one. Don't know. Maybe this is a type 3 for this. We don't know. We'll see that when it happens. Here's one that almost qualifies on the other end. But notice the difference between this one and this one. Everybody see it? There's a difference. See, this one presses, expands back the other way. This one presses, it doesn't expand. See it? It just toys with it. See? This one, there's no toying around. We're not screwing around. See? This one, doesn't qualify. It's got to not screw around. We'll put that in the instruction. No screwing around. Everybody see that? So this doesn't zoom. This one zooms. It not only zooms, it makes another little high here. So this doesn't count. It's a different animal. So there's no expansion up and there's no expansion down. It's a different animal. Now we're getting a little more sophisticated. So we can pick any of our charts and go play and go look and see these things. You see, I've already started marking. A bar level, boom. It tries to hold, no dice. I got another bar level, boom. It's currently holding. One down, 9,999 to go. Yeah. Just to practice, Nate, you already know, just to practice, you will start to learn things. So instead of doing too much at once, you're just looking for same size swings that pull back into each other, and then, drawing a zone and thinking about it. So you just need to follow, all right, do these qualify, and practice. Yeah, they pull back. And do they expand? See how I zoomed right in on that? And that fits my definition? Because it's a very organized behavior. Somebody's organized themselves for us. Thank you. And we have the ability to recognize it. And if I just do swings, see, I've not complicated my life. I can say, oh, okay, I got swings. Now I can say, all right, now I've got this press here. And this one's not at the bottom. This one's breaking the low. It's closer to a pressure cooker. And I could say, we've beaten the blue, but not the pressure cooker. Didn't take the high out. Now we're in another case, right? We've beaten the blue. This one, I don't know. Maybe we want to short it. Maybe we look for a sign. Maybe, who knows? There's no one answer. See, now we're nice bar level on the 7th. Oh, you mean like in here? Here's the 7th. Oh, this one. Oh, the other way. Oh, there you go. I didn't even see that. We're going to have to name that. Oh, boy, it's hard to keep up with you, Raj. Let's consider also the difference between this, although this qualified, the difference between this and this. Does everybody see what the difference between this and this are? Besides, it expands the other way. The difference is this is kind of in the muck, while this is yay, And so very easy trading decisions can be made here. Does it beat the blue? Yeah, it beats the blue. And expands. Right? That's what, action reaction is kind of doing for us here. But I've just confused the matter. I just wanted to throw that in, just in case. And so we'll play with this. And we're already watching one we did last time on, I think, Snap or Spot or something. and just go over your markets and see how I grab that. See, that's practice. And then draw it and say, we can start doing our own research in it. Weekly snap. Thank you, Matt. Or thank you, Nate. We can start doing our own research with this kind of a thing. So let's look for our... See, I love to just find live situations because we can learn. If you followed our original drawing on the euro, we busted the line. Now we're on this side of the line. What's it going to do from here? See, mountain, valley, mountain, valley. So we keep watching, and we want to keep simple methods. We want to keep simple methods. Okay. This market is a little bit of a different animal than other markets right now. We just want to keep simple methods, swing-wise. Structure it. If nothing else, keep yourself out of trouble. How high is the swing? About that big. How high is the swing? About which way is it going? Okay? That's my start. When I'm thinking, do I want to buy this try here? It's nice. Do I really want to? See, that's my start. I don't know for sure, guys. I know I can watch, wait, see what price tells me here. I can lean into this, but if I can structure, I can see minor swings, major swings. Minor gets beat by a little bit. And then if worst comes to worst, the least I can do is to know what I'm doing if I try to switch here. This is the kind of thing that ruins people's months, is they just get stuck. And so even before we say switching bias, so on and so forth, let's just see the truth. And in a market like this, I mean, do we see how easy that can be? And then we know when that changes. And that's all the press structure is. Then we know when it changes. One line keeps you out of trouble, or what you do is you finally say duh one day and you go with it. If you've gotten trapped into taking these over and over and over and over and over and over again. That's what happened to me. One day I said, duh. All right, enough with staying out of trouble. It doesn't feel right. I'd rather get a new high. But let's try it. And that's how we change our experience of things. And that's that understanding I talked about. I mean, I can tell it to you and you can get an intellectual understanding, but until you actually pull the trigger on that duh one day, you're not going to get the experience of it. And, everybody's got to do their own practice. Nobody can do it for them. So we'll go follow this one line thing and swing. So keep in mind, we're doing swings and we're doing presses. Go through, find clean ones. You can post it in the session chart so we can make a new channel there. Find clean ones, both up and down. Make observations and try and get what I'm saying about cleaning up doing too much and all the overwhelming stuff. All right, that's what I want you guys to get. So just a reminder, we're not going to be here on Friday. Thank you, Edward. You guys all have a good holiday and a 4th. Thank you, Evan. Appreciate it, Gary. Take care. Do some work. Chan, we'll keep helping you out. Thanks, Gina, Raj, Stephen. All right. You guys take care. We'll see you on Monday. Do some practice.